Thank you, folks, for joining. We will get started momentarily. We have quite a few folks still trickling in, so we'll start just at a minute after 1 o'clock Central Standard Time. Julian and Sam, if you'd like to join me on camera, it is 1 after 1 o'clock Central Standard Time. We're going to go ahead and get started. Thank you, folks, for joining us. I see quite a few people still trickling in for this episode of Expert Solutions. The title is Next Generation of Customer Intelligence: How to Offer Credit Karma-like Services in 2024. The promise of this webinar series, if you've been to it before, which we've been in flight for over a year now, is we discuss a specific challenge that's modern banks, lenders, and insurance brokers are facing in today's market, the opportunity that it proposes, as well as the specific way that Total Expert will solve for that challenge. And of course, we always conclude with a demo. Today, you're going to see us walk through kind of the key pillars of this webinar format. I'm joined by my great colleagues, a return guest to the program, Julian Hebron, and a good friend of mine, as well as Samantha Thielen, who has become a staple on the Expert Solutions webinar series. I think it's back to, due to popular demand, that her demo is always knocking out of the park, so we're happy to have her back as well. Samantha, I don't think there's any need for introduction, given that folks know who you are and being a regular, but Julian, you are a friend to many of our customers, partners, as well as prospects, but would love for you to just give a quick overview of the basis point and the value that you bring to the market. So if you can start with that, that would be great.
Sure, happy to. And first of all, thank you, Ryan and Samantha and Total Expert, for having me on. Julian Hebron, I'm the founder of The Basis Point. We're a sales and strategy consultancy to banks, lenders, and fintechs. And we stay, as you all know, very, very involved in the industry across those three segments. And like to take a very close look, especially when we do public remarks like this, at what's going on out there. So we got some fresh data for you all today to kind of go through and bring some context to what you all are going to present. And I am hoping to, I think everyone knows that one of the things that we do out there in the space is that we like to highlight a lot of products out there. We do it on all the main stages of all the big shows. And it's been a minute, Samantha, since we have done an on-stage show together. So we're on stage digitally today. So I'm hoping you'll allow me to ask some questions when you do actually run through the product, because there's a few things that I think are going to link to a few of the points that I was hoping to cover today.
Awesome. Thanks for being with us, Julian. It's always great to have
Absolutely.
you. You know, as we talk through this topic of how you create Credit Karma-like services for your consumers, it ties back to an age-old topic, which is delivering consistent, relevant customer education. We know that there's a direct link between how often you're in touch with your customers, the value that you're providing when you connect with them, and the depth of that relationship. And this is a simplified version of a customer journey, but what it highlights is that there are a significant number of transactions throughout the course of a consumer's lifetime. These are major milestones when it comes to planning for their future and creating financial health and wellness. And in today's market, being there in the moments that matter, when they're getting married, when they're having children, when they're preparing for retirement, these are really important things, because you know, a few years ago, the choices that were available to consumers when these financial milestones took place were very straightforward. If you wanted to buy a house, there was the opportunity to get very favorable terms on a rate term mortgage. But today, there's a bunch of dynamics and there are things that are both opportunities and challenges for consumers when they think about these big financial milestones and how they create long-term wealth and financial wellness. And so there are a few things that I think are really impacting that equation for consumers. And and Julian, I'm going to ask you to talk through both of them. The first is there's a record amount of home equity that consumers across America have today. But at the same time, there's a record amount of consumer debt. And so how do you leverage the assets that you have in the context of the debt that you're up against to create the best financial picture for you in the future? And there's more need than ever with the complexity for financial advice and guidance during those major transactions. So Julian, maybe we can level set in terms of what the macro trends are as it pertains to equity that's available and how that impacts consumers. So do you want to talk through some of this data?
Sure. I mean, if you want to stay on the previous slide just for a moment, I'll get into this slide in a minute, but
Sure.
if I may, I want to start by saying it's so noisy out there. It's so noisy for all these life events for everybody. I'm a rabid consumer of all media, and as a career-long financial services professional, I will admit it, and I think that everybody in our industry should admit it. It's harder than we all make it out to be of like, hey, we get it, like, and we have to educate people, but it's harder than that now. There is so many things coming at everybody, and what we're observing at the basis point is it's worse than ever in terms of people just we could, if we wanted to freestyle, which just FYI to the audience today, we're not going to do, but if we were to pull up a few social sites, a few social streams, a few news sites, financial news, including very credible financial news, I promise you all that every single one of them, we would not have to scroll past what you see on the screen to see some alarmist headline that's telling everybody in every single one of these life events how they're screwed and how it's not going to work out for them, right? And this is because media, for the most part, gets paid by creating this alarmist stuff. So if you want to level set, the job that we have is to cut through all that. And it's very difficult. And we're going to talk about how certain consumer apps and stuff are going to, are also cutting through it in another way. And we also have to contend with that as an industry. But first, yeah, if we want to go to that other slide, let's do, instead of headline stuff, let's just, today is about data. We're going to go real fast, but I'm going to be pretty specific. So I at least want to start. I'm not even going to talk about what's on this slide just yet, because what's on this slide is tappable equity. But let me just, just give everyone a quick hit, because even in our industry, we throw around these equity numbers, but let me just bring it out, okay? What's not on this slide is this. The total value of all American real estate right now, residential real estate, 44.5 trillion. Total mortgages outstanding, 12.9 trillion. That leaves 31.6 trillion in total equity. Okay, so that's something that, again, media that don't follow this stuff very closely, they'll throw that one out. But is that useful to us as advisors? Not as much. So what's on this slide is this thing called tappable equity, which is a more nuanced thing that consumers don't know, right? So
Julian, do you mind?
Yeah.
We just talked about the complexity that goes into, both the asset and debt classes that are available. If we ground this for consumers, there's tappable equity, there's total equity that's available. Do you think the average consumer understands the difference between those two things? If you ask someone at the holiday party you're going to go on in 2 weeks, like, what's the equity in your home? What's your hunch on the response that you would get back?
I think that people know the value of their home, but they don't know the equity. And even when they do, they don't know how to take action. And most importantly, again, the aggregate numbers that I gave, that's sort of what people might know. They might know that I owe this much and I'm worth this much, but that's the total equity, the difference between those two numbers. And that's just not something that's actionable. Tappable equity is what's actionable relative to loan guidelines and also systemic safety, right? So I think just one basic tip, like I'm wearing my holiday sweater today. So yes, we're all starting to kind of move into the holiday party circuit. We're all going to be with family, friends. Everyone's out there working prospects all the time at all their social situations. And it's a great conversation because you don't have to be like, actually, but you can very elegantly talk about like, hey, there's this other thing called tappable equity, and I'll just quickly explain what it is. I think a lot of people on this call know, but sometimes people don't read all the fine print and don't know. So again, those total numbers, total value minus total mortgage in America is how some of the big stats go. Tappable equity is a little bit different because it's first of all, it's predicated on homes with existing mortgages. Okay. So you're like, how in the heck is the total equity in America 31.6 trillion and total tappable equity is about a third of that at 10.6 trillion, which by the way is a giant number, but it's a third of the total. Why? Because the first one is predicated on total value versus total debt, but a lot of homes don't even have any debt. Tappable equity is very specifically calculated based on homes that already have a mortgage on them. And then it caps at 80 LTV, leaving 20% equity in the system. That's how you get to the 10.6 trillion. So that's number one. And the takeaway number two, which is the most important one to kind of bring us to the next part of the conversation is, okay, how does this relate to debt? I'm just going to point out this like blue highlight on this slide, which is the, and for listeners, I'll just explain it as well who aren't visually looking at it. From January 2020 to present, and the present is the 2023 Q3 data from ICE, homeowners gained 4.41 trillion in tappable equity. So just as a standalone, that's just an incredibly large number. But I do think that when we view it through some broader context, which if you want, we can go to the next slide. This is where it gets very interesting.
Yeah, I
Because,
will here in just a sec, Julian. I
yeah,
think that what you've highlighted there with the nuances of total and tappable equity is even for maybe some of our listeners that there's education that needs to take place. The gap between folks who live and breathe this industry and the opportunity within that asset is clear. And I think you've explained the nuances, but to a lay person, someone who is just trying to figure out how to pay for their kids' college because they had a financial milestone, or how to add an addition to their house because they need new space for an aging family member, like there's nuances in there that they need education on how to utilize that asset that they've created. And so that presents a huge opportunity to become a trusted advisor. But like you said, that's part of the equation. The other part of the equation is the rising debt that they need to take into consideration in order to make a good financial decision. So why don't we talk about the consumer debt trends and how
yeah.
that impacts the need for education? So I'll pass it back to you.
So one, rising debt, and two, which I'll do on the next slide, is the rising cost of the debt, especially the non-housing debt, right? So this is a chart again that just puts things into perspective. So one more time, 4.41 trillion in tappable equity, which is lendable because it's 80 LTV. You can do that with a first lien, 80 CLTV, I should specify, but also just leaving the system safe, which I think matters a lot. Now, with that said, 4.41 trillion gained January 2020 to present. This is total non-housing debt, the burgundy line, 4.8 trillion in America. Just coincidence right now, but look at that. Like the equity gained from pre-pandemic to present by homeowners is about the same as all consumer debt outstanding. But what do consumers hear? Debt is at a record level. The world is falling. The sky is falling. But we don't live in a world of headlines. We live in a world of life events and people living their lives and making decisions and needing advice, right? So I like putting these two dots together because it doesn't get put together that much, but I think it's incredible that just in the last few years, we've gained as much equity in tappable equity in American housing as there is total consumer debt outstanding. And if we want, we can do these by category to show where some of the opportunities are, right? So if we look at, and again, I know some people are listening, some people are watching, but that 4.8 trillion in total non-housing debt in America is comprised of student loan, auto, credit card, and other. And other, according to the New York Fed, is largely comprised of one thing that's in here that we've asked them about, just to clarify, is where is all the buy now, pay later stuff going? Because this has been a huge trend in fintech in these last few years. That's in there. And then personal loans are in there, retail store credit cards, stuff like that, gas credit cards, those kinds of things are also in there. Okay, so that's how you get to the 4.8 trillion. Credit cards, we know, are in the 20%-ish range. So a lot of your listeners know this stuff already in terms of when you start looking at blended rates, how things play out. But what I like looking at this in this context for, in terms of, this is the American debt picture, in right now in the current quarter. And this to me isn't what, if you will, the media would say about it, which is like record debt levels. This is the opportunity table. This is where you can take what you know about a customer and optimize it. And so when you look at it all at once like this, instead of like headlines that are all gloomy doomy, you can actually start to advise and make some decisions on this stuff. And this, of course, I get is macro. We're going to, of course, have Samantha get into the micro, but I just wanted to set up the macro.
Yeah, Julian, this is so good. And I think it exposes that there's both opportunities and challenges. And I think for the consumer individually, when they're trying to make a decision, but the thing that you and I talk quite a bit about in preparation is just the vast number of sources where they're getting information and how they make sense of that information. And
Yeah.
one of the things that was really interesting for me in prepping for this discussion is we did a bunch of research, and this, you could look at the number of consumer apps out there and the functionality of those consumer apps. They're showing both debt and assets. They're trying to show a complete financial picture. And that's been something that financial apps have been trying to do for a long time. But this to me is where the rubber hits the road, which is consumers are actually spending their money across a ton of financial institutions, and they're doing it on a regular basis. So the proliferation of choice and the ability for consumers to do the research on their own, if they're left unengaged, right, is a major risk for modern FIs. This stat says that 59% of consumers recently acquired a financial services product from a provider other than their bank. What that means, if they needed an auto loan, they went outside of the walls of the bank or financial institution that they had a mortgage with. If they needed a consumer loan, they went outside the walls of that bank. And so if the bank was engaging them in the proper way, was educating them, that they would have had a much higher propensity to buy from that bank. And so this is a big challenge, especially with the way consumers engage, spending time on apps, spending less time, face to face. But do you want to cover off on, how you think this is impacting the market, as well as, steps you've seen to try to reverse this trend?
Yeah. So this stat is very stark. Almost 2 and 3 are moving on for each product, right?
Yep.
And on the one hand, the rise of the consumer apps, and I'll do a quick little history here in a second, consumer financial apps, has done a lot to cut through some of this headline and social media headline chaos, right? The apps do a decent job, very good job, frankly, of telling folks, okay, this is my profile. I've connected all my stuff, and I can actually start to make some decisions. But I'll just say the obvious, the whole point of those apps is to then, refer, they're lead gen machines. So they're referring away. So you're either paying to reacquire your own customer, or you're losing them if you're not engaging in a customer acquisition strategy, which a lot of firms aren't, because they run licensed well-paid, well-experienced people that are supposed to engage folks, okay? So how do you put all these dots together? First of all, though, let me just do the quick history of the apps, because people, if I'm sitting here being a consumer, I do have to say, through viewing it through the consumer lens, it's better for them to be on apps getting advice about their own profiles than it is about them, doom scrolling headlines, right? But it
Absolutely.
does create this whole other dynamic for banks, lenders, insurers to figure out retention and acquisition. Okay. So, but let's talk about it as a retention bit, because you don't want to pay to just get the people from the apps back again. But let me give some app history. So Mint was like the OG of like the direct connect. I mean, Mint frankly paved the way for all of us. They paved the way for the whole POS category to direct connect assets to get loans, all of that. They're the first ones that ever did it. And it was originally around budgeting, and then it started to mature. But it's like this. They were founded in September 2007. They gained 1.5 million users in 2 years, and they were bought by Intuit for $170 million in September 2009, 2 years later. Credit Karma, okay, founded March 2008, a little bit after Mint. They gained 110 million users. They killed it. They were bought by Intuit for 8.1 billion in December 2020, 3 years ago, right? Now, 3 years later, Intuit announced that Mint is going to be folded into Credit Karma effective January 1. So Mint, this beacon of fintech innovation, is going to disappear from the internet effective January 1. But it all goes to Credit Karma. And if you want to flip the slide, I'll just talk about the impact. You can't say that people don't love this stuff. This is not a prettied up slide. This is a direct cut and paste from Intuit's investor material on their last quarterly report. They're now up to 136 million members. And that's on the top little segment here. And they have 60,000 data points per customer. You're like, how do you even have that many? So if you think about it in the world of, say, mortgage, where you've got a 1003, where you've got all income, assets, debts, employment, credit, everything, there's a lot of that right there. But remember, Intuit also owns TurboTax, so they also have all those data points as well, right? So this say nothing of what they claim 65 billion in daily machine learning predictions, et cetera. So doing intelligent things to advise with that data, all amounting to referring your customer away. That's how you get to 2 out of 3 people leaving you, right? If we want to do an example closer to home, just real quick, and then we'll talk about how to deal with this. But let's go one more slide on Credit Karma first, because just if you're wondering, like, well, that's just credit, it's not a big deal. It is a big deal, because they have credit. Now with Mint coming in, and they already had some of this on their own, but now they have budgeting, they have savings. They're now doing like very, very advanced net worth presentations. And of course, they are really putting housing as a priority and starting to show this 136 million consumers a lot of the things that certain sectors, including mortgage, have made progress in terms of engaging and keeping people that way. So this is something that we're all going to contend with even more, as even just one single machine, 136 million users, that's substantially more than, you could almost win 2 elections with that many votes, if you will. So it's a lot. Now, closer to home, let's look at one example, Rocket, okay? So Rocket was another very, very interesting example here, because Rocket, 2 years ago, December 2021, they announced that they were going to buy this company Truebill for $1.3 billion. That's now called Rocket Money. Okay, Truebill was like, cancel my subscriptions and save a little bit of money. But you can see on the screen here, and I'll say it for the listeners, they now have the credit monitoring, budgeting, the net worth, the savings, and obviously with the marketing weight that Rocket Mortgage has, the mortgage sell and retention is all embedded into this now as well. They claim on their site to have 5 million users. The quarterlies are what we believe more, and the quarterlies for Rocket say they have 3.5 million, but still, they're doing very well. So this is a great example close to home that I think brings us kind of all the way around to, all right, do we have this kind of stuff? And the answer is absolutely yes. I do think that the answer is yes. And I am eager to sort of let Sam have her run here, and I hope she'll let me jump in with some questions, because this stuff is what everybody has to contend with. And I think that the missing link in all of that, including the last example I gave, remember that's a direct shop. They are not as focused on the human advice, right? They're focused mostly on the machinery, but what Sam's got is the machine that sort of brings these all together. So I'm going to turn it back to you, Ryan, and I hope to be able to jump in on some of what Sam's going to show.
Absolutely. And Julian, I think the progression that you showed there from Credit Karma informing consumers, right, but not necessarily having a direct relationship to advise or necessarily have transacted with them. It's, the aggregation service versus, moving on to Rocket, which is getting closer to home for a lot of the folks that we deal with, because there is a team that may have transacted with that consumer before that they can reach back out and engage them based on what signals are showing in the app. But customer intelligence, I think, is the next iteration of that, which is it's not just the insights that you're going to get from on each consumer. It's not just the prompts that might go out to a producer who has the relationship, but it's the automation that sits alongside of it. It's the data, the insights, and then the action that can be taken with a combination of intelligent automation with the human touch at the right time to be there in the moments that matter. And so we're really, really excited to show the next generation of customer intelligence. It's going to help you identify the moments that matter to consumers. Not just the moments where there is a transaction taking place, but a moment that you can start to nurture a consumer for a transaction that might take place 3, 6, 12 months down the road. What is very, very unique about our solution is it's combining those insights and an ongoing intelligence about a consumer with action. An action that's intelligent, action that's proven, action that's compliant, to deepen those relationships. And so many of the folks on the line know that we have a series of insights that have been available for the last year and a half, and tremendous value that we've driven for our customers, over 10 billion in loan applications across a very growing number of customers, but we've added to that. You can see we've added life events, which includes when someone has a baby, when they get married, when they get engaged, if there's a transition in terms of their job and their income, if they're purchasing a second home, if they're going through retirement, all these rich insights that are going to get written to every single consumer record are now available with, or will be available, in the very near future within customer intelligence. And so I'm thrilled to have Samantha walk you through a demo of a few different scenarios that we include these rich consumer insights like equity and the intelligent automation that's going to help you deepen relationships and be there in those moments that matter. So I'm going to pause here and we're going to pass it over to Samantha to start sharing.
All right, and while I am pulling up my screen, just like Ryan mentioned, this is Total Expert is a customer engagement platform. So what we're aiming to do with our customer intelligence offering is not just surface insights, but actually fully incorporate that into our intelligent automation and sales enablement that we provide to end users. So just to kind of recap on what we've been offering already today is the ability to monitor your customer database or leads, basically anybody who's in the Total Expert platform, and surface opportunities based on those different insights that we offer. So for example, this is a credit pull insight that we're looking at here. This is easily configurable within the Total Expert platform so that, you know, as you're going through and adding in insights, creating new journeys, and really building out those workflows, is really built for your admins to be able to easily pull from all of these different insights and enrichment that we're offering. And then what the journey can do is what our journeys do best, is actually create an entire workflow built around that insight and creating these ideal customer experiences. Where we've really leveled this up is in our next gen CI, is the ability to actually enrich data as well. So if you think about something like a credit pull, this is a very clear moment in time. You know, somebody has pulled their credit with another lender. You need to take action. It's very clear what kind of conversation to have with this past customer. But when you're looking at things like equity, you know, this is less of a moment in time and more of Total Expert providing additional enrichment to help you really map out what that ideal process is for your customer. So in this example, when the equity watch is triggered, it's because they've reached whatever the preset minimum LTV threshold is. But then what we can also do is actually calculate some data points and use that data both in actually deciding what path is right for the customer, as well as providing that data directly to the customer. So in this example, after that equity watch is triggered, the journey is looking to see if the LTV or estimated LTV is greater than or equal to 78. And so then if it's greater than or equal to 78, then they're going to automatically enroll in a PMI drop-off educational campaign, where we're really helping the customer understand what their options are, what to expect, and really what to do with that equity. In this example, we're also actually showing that data directly to the customer by pulling that estimated data into the email content as well. So this is to help Arn, in this example, really understand that he's almost eligible and here's what to expect. Versus anybody whose LTV is actually less than 78. In this example, they're going to go on a HELOC educational campaign. Again, going back to that conversation at the dinner party around not knowing how much equity you have, you know, understanding kind of the general value of your home. What this is allowing our lenders to do is actually help educate their customers, not only in the options they have with their equity, but also helping them to understand even generally what amount of equity they have. So again, what our journeys are helping to do is tap into those insights, that enriched data, and create a much more tailored experience for the customer to help educate them and provide the right kind of guidance as they're deciding what to actually do with this equity.
I want to make one remark, including on the marketing material, because it reconciles with a statement that I made before, which is that marketing material that you just put on the screen is indicative of material that is compliant too, because it's not necessarily going to the specificity of what I made in my remarks of saying, well, here's exactly the amount, like here's the exact guideline, and if you will, the quote, because it's not meant to do that at this stage, because there's a human on the other end of it that's then going to kind of follow up with it and take it down that hole. But then automating this in a specific but compliant way, I think, is the underline that I just wanted to make there, because that's harder than it looks, and the consumer apps don't do that.
Yeah, exactly. And I would add on, not only compliant, but this is also the enterprise really setting up whatever that best practice experience is. So helping to guide that nurture, helping to guide the loan officer in this example in what kind of conversation to actually have with that customer. So again, that's the power of our journeys in combination with this enriched equity data, is actually being able to kind of map out what that ideal, optimal, compliant experience really looks like. What we also offer, you know, again, journeys, as we look at these pages, obviously this is something that admins are publishing on behalf of those relationship managers. The automation is helping to nurture and educate their customers. But what we also do is provide this data directly to end users of the Total Expert platform. So again, as a loan officer, when I'm logging into Total Expert, I'm able to not only work off of the opportunities that the journeys have offered me generally, but I can actually look into that enriched data, and I can kind of slice and dice this data to better understand, my different customer paths and to better surface opportunities for myself as well. So what we can see here is just a listing of some of my customers and some of those enriched equity data points that Total Expert is generating. Now, what's really cool here is, again, the loan officers have direct access to this data and to be able to manipulate things like filters, so inclusion and exclusion rules, so that I can actually create different buckets of customers like my cash out refinance opportunities, for example. In today's market, you're not going to see a tremendously high number of refinances, but with some filters to actually identify, anybody who, based on the rate of their existing loan, may actually be really interested in a cash out refinance. Versus, again, being able to kind of play around with this data to actually identify more of, something like a HELOC opportunity, for example. And again, this is giving flexibility to the loan officers to be able to actually generate these different lists, as well as being able to actually see this data displayed directly in front of them, so that as they're having these one-on-one conversations with Laura Benton, for example, I actually can explain to her, okay, based on the loan that we have with you, we kind of understand where you're at. And so again, I'm in another view here where even within the customer record, when I'm looking at those loan details, I'm also able to look at that estimated equity enrichment data. So this is all just built around supporting these customer relationships, providing that first tier, education to your customers on what's right for them, and better understanding and anticipating their needs.
Quick question, and if this is too much for this, it's okay. But on the Laura example, the Laura Benton example, if I was an LO and I wanted to say that I wanted to have a trigger that tells me, so she's at 44, and I want to be able to, know that I can offer her some sort of either cash out or home equity opportunity that's capped at 80 CLTV, I can use those other little filters in the right menu to sort of set that however I want, correct? Or is there a different functionality for that? So it's like, I know that I can take her, in other words, from 44 to 80, but I'm not looking to take her from 44 to like 90 because guidelines wouldn't allow for that anyway, right?
Right.
But yeah. So is that something that's at the LO level, or does that also involve like marketing team support?
Yeah, I would say it comes down to both. Again, for the loan officer's experience, they're able to tap into all of this data and set up the filters and say, for this example, I want to pull in anybody whose LTV is 75 or greater, but lower than 85, for example.
Okay.
And then from the journey perspective, that's where rules can be set up so that, a journey triggers and sends specific communications based on those different parameters as well. So it's really both. And it's kind of up to the organization and up to the individuals on how much they want to be able to tap into this data.
Got it. Okay, thank you.
Perfect, yeah. And the last piece that I wanted to be able to showcase today, a lot of organizations out there will have, really cool enhancements to their platforms, things that look really valuable, but then they're not able to actually support their customers with understanding the actual ROI or success of what that is. And so Total Expert offers an array of reporting. Within the journeys themselves, you can even set up custom reports to view the success of individual journeys. But what we've also launched now is a tool that we call Embedded Analytics, which is a visualization layer on top of the data. And we have an entire pre-built dashboard on customer intelligence attribution. So this is being able to surface things like the number of alerts that were generated month over month, being able to see the actual breakdown of what those alerts were, and then the attribution. So loan applications, loan volume, and funded loans and loan volume, based on those alerts being triggered. And so this is all even just a starting point for our customers, where they can actually take this dashboard and go ahead and modify it so that, again, this gives you the ability to actually dig into things like visualization, but also the data points that you're looking at to truly understand the attribution of these different insights and how they're surfacing opportunities or better educating your customers to better understand the value there. So this was just so cool and so important to be able to show kind of the zoom out of the success and the value that something like Total Experts Customer Intelligence can really offer.
Yeah, I think I have one follow-up question on that one. And forgive me, I know you went through it very quickly, but is that down to like the lock level, or is it mostly predicated, are these results mostly predicated on fundings, or is it a little bit of,
It's
fundings, apps, fundings?
So
Yep.
the way that the dashboard is configured kind of at that template level is application volume and then funded loan volume. But again, that's where an admin can actually go in and modify this so that if there are different data points that a customer of Total Expert views for actual, value and attribution here, that would be configurable for them.
Yeah, got it. Yeah, that part is really cool. I would just offer one remark, which again is sort of related to my other opening remarks, that putting this all together, because if I may tie it to the consumer apps. The consumer apps, for all intents and purposes, are alerts, but actioning on those alerts means pretty much ditching your existing institution for the most part. But then this part, being able to have all of this stuff just be related to the institution and then also be able to see what you're doing. The one thing that we study on tech stack stuff overall is who's putting it all together. How can you run an entire acquisition through funding kind of operation with? So that's where this part to me is what brings it all home of like, all right, is this another tool or is it actually working and I can see that it's working, so that part is really very interesting to me.
Exactly.
Samantha, thank you so much for the demo. Not surprised the amount of value you packed into about 10 minutes there, I think.
That's right.
There was one question that came through in the chat that I'm going to try to paraphrase. It's a bit lengthy, but essentially, what alerts do you expect are going to drive the most value in the next 12 months for lenders, banks, and insurers? Like what are the, we talked a lot about equity today. What are the ones that we know our customers are excited about leaning into in the next 12 months?
Yeah, and I'm certainly, Julian might even be able to better answer something like a predictive element, but in my experience, the people who have something like the rate alert configured and set up today are going to be miles ahead of anybody who doesn't have something like the rate alert for when the market shifts. Knowing that the past 2 years of funded loans are all going to be refinance opportunities as soon as that shift occurs. Additionally, the credit improvement journey that we're going to be, or the credit improvement insight, the ability to actually understand when somebody who may have previously been rejected because of, credit score impact. Once they're actually able, once their credit score improves, I think the ability to actually, provide those needed services and resources to those customers is going to be very valuable as well. Julian, I'd love to hear your thoughts there.
I can tackle it, and I agree definitely without question on the first one. And here's why. On the rate alerts, MBA is predicting 6.1. We're roughly 7 right now on the 30-year fixed. MBA is predicting 6.1 by the end of next year. Fannie Mae is predicting 7.3. So that's the widest. Those two are, they can be apart. They have been apart, but they haven't been that far apart. And they both just revised this a week and a half ago. What that does is it proves that rate predictions are an extreme sport. So we can all talk all we want about what we think is going to happen with rates, but what this does is lets you set these thresholds that you know that you can make a deal and automate the outreach. So because the market will be volatile, that spread indicates a great degree of volatility as we figure out the Fed's path. And everyone knows you got to act extraordinarily fast, and that's what this enables. Because I promise everybody this, the direct firms, we've been doing some work this week talking to folks about what they're doing for next year, and the direct firms who have been hit the hardest in mortgage, they will be ready for this. And so the retail side of the world, this is how you stay ready, and it's the only way. It's immediate outreach as fast as the direct firms are capable of doing it. This enables you to do that as well. So I'm going to leave it at that, because I think that is going to be the hottest topic next year, is when to capitalize, because that's what everyone wants to do so that they can shore up these last 2 years that have been pretty rough from a profitability standpoint.
Absolutely, team. Julian and Samantha, thanks for those insights there. That is right on from what I've heard from talking to some of our top customers. The other thing I might add to that response is, especially banks and insurance firms some of them have figured out how to identify life events through conversations, through tracking within their system, but doing it in an automated, scalable way is something that's been very difficult. And the stat that we showed about 59% going and shopping for a product or buying a product from another institution is alarming. And so the desire to act on those life events, identify and act on those life events, even if it's a nurture stream, not a direct opportunity, is something that there's a real need for. And so the life events, especially at a bank, if someone gets married, it unlocks a tremendous number of products. The same thing if someone is moving into a different stage of life or a different income bracket for insurers, or they have there's a baby that's born, that unlocks a tremendous amount of opportunity as well. So marrying those life events with the automation in a scalable way is something that we've got a tremendous amount of momentum, especially from banks and insurance companies here over the last few weeks, as life events has become more prevalent in our customer intelligence product. So we have a few other questions in the chat. I think that most of them are very specific for use cases, so we may hold off for the general audience that's on the line. And I think what we will do here, Julian and Samantha, is I think we'll conclude. And I just wanted to say thank you for the time, for the insight, for the demo. Julian, it's always great to have you on. Samantha, thanks for all you do. And for our listeners, a recording of this webinar will be sent within 72 hours. We will follow up on the specific questions that were put into the chat, and keep a lookout for the next episode, which will be coming very soon. Thanks everyone for joining us. We'll see you next time.
Thank you.
Thank you.